again to our community enrichment. She is full of so much knowledge, and we're excited to have you. So, without further ado, Kelly, you're welcome to go ahead and get started.
Thank you so much, Heidi. Good afternoon, everyone. As Heidi said, I'm Kelly Nelson. I'm the Outreach and Communications Manager for the Maryland ABLE program, and I am really excited to be here with you this afternoon. And I appreciate you guys joining me on which is probably your lunch hour. So thank you so much for being here. I'm going to just assume that many of you who have joined us today are somewhere on this continuum of I just heard about able and I want information, so that's why I'm here. Or I've gone to a couple of sessions, but I still have some more questions. Maybe you already have an able account, or maybe you're managing one for someone else. So what I'm going to do is I'm going to provide a basic overview. So for some of you who may be familiar with some of that, just bear with me for a little bit so that everybody's caught up to speed. And then I'm going to talk about, the legislation that makes this ABLE account possible, and eligibility requirements, how to enroll in the account, the main benefits of having an ABLE account. And then we're going to kind of hone in on some of the specific features that are here in Maryland that we have that I think are really worth mentioning if you're not familiar with them. So I'm going to go ahead and get started. But before I do that, I'd just like to share with everyone that in addition to working as part of the Maryland ABLE team for the last 6.5 years, I'm also a parent of a young lady who's 21 years old now, and she's had an ABLE account since she's been 14. So it's really given me an opportunity to develop some very practical, real life strategies with ABLE accounts that I'm always happy to share with others since I've got a little experience in that way. It's also been a wonderful opportunity to see how it's helped our daughter to grow in her financial literacy, and her independence, and also give her dad and I a way to begin planning and preparing for her future for when we are no longer here. So all of those things are going to be talked about today in ABLE. Let's go ahead and get started. I will just ask that if you haven't muted your mic, if you wouldn't mind just muting, so that way I can make sure that everybody can hear everything. Let's take a look at ABLE accounts and what they are. Basically, an ABLE account is a way for a person with a disability and their families to be able to save money without losing those critical state and means tested benefits. That's going to be things such as SSI, Medicaid, and other types of waivers. Okay, so for many decades, actually since I think 1970 or 71, folks that were receiving SSI benefits have not been able to have more than $2,000 in assets. And this is a real problem because people were being forced to spend down their SSI money so that they wouldn't go beyond that $2,000. And then they found that in a couple of months later or weeks later, they needed money to pay for a big expense, maybe dental expense like a root canal or something. They didn't have the money because they had to spend it down just to keep from losing their benefits. It was creating a cycle of poverty for people receiving SSI cash benefits. So thanks to the advocacy efforts of many people across the country for at least a decade, and under the leadership of one particular parent named Stephen Beck Jr., we were able to see the ABLE Act, Stephen Beck Jr. Achieving a um, Better Life Experience Act was passed and signed into law by President Obama back in 2014. And when that happened, it made it possible for states across the country to open up ABLE accounts. And instead of having to just be limited to $2,000, they are now able to save up to $100,000 in an ABLE account without losing their benefits. And when this happened, it was a wonderful opportunity for people with disabilities, but ABLE programs didn't open instantly because it wasn't federally mandated and it didn't provide any money for states to do so. So it took everybody a little time to get up and running. Here in Maryland, Governor Hogan signed our ABLE Act in 2016, and we launched our program in 2017, having celebrated our 7-year anniversary back in November. We currently have 7,557 Maryland ABLE account holders who together have saved over the last 7 years over $118 million in assets. So it really has been a game changer for folks who previously could never have more than 2,000. We are operated and facilitated under the Maryland State Treasurer's Office. So if we could advance to the next slide, Heidi, that would be great. And the main reason that people are, I'm sorry.
So sorry. I launched a quick poll just to give you a little grasp of where
Oh,
everyone
okay.
is. So about 3 people have never heard of it,
Okay.
14 just hearing about it, and 1 is using it, needs some guidance.
Okay. That's wonderful. Perfect. Perfect. So I think there'll be something here for everybody today. That's great. So let's take a look at some of the main reasons why people are interested in ABLE accounts. The first one is what I mentioned previously, the ability to increase your saving limits beyond that $2,000 without impacting or losing those SSI cash benefits, right? So now within an ABLE account, a person can save up to $100,000 and still maintain their SSI. And money outside of an ABLE account, whether it's a regular checking or savings account or any kind of a regular account, they could never have more than $2,000 combined with all those accounts, or they would lose their benefits. So that's the main difference, money inside of an ABLE account and outside of an ABLE. It also protects other benefits such as Medicaid, that's that health insurance piece, and also all those Medicaid waivers. That would be things such as SNAP benefits, housing vouchers, and all types of other community waivers as well are tied to that. So remember, money inside of an ABLE account is not considered a countable resource by Social Security up to $100,000 or by Medicaid. Okay. The other benefits are that there are no federal or state taxes on the earnings in an ABLE account, not when the money's in the ABLE account and not when you take it out. As long as you're using that money that you withdraw for the beneficiary, which is the account owner, the person with the disability, and using it for anything that's going to support them in their health, their independence, or their quality of life. So it's tax-free savings. There's also access to a Maryland state income subtraction, which is really nice because if you have an ABLE account and you make contributions to your own ABLE account, you can use that contribution as an income subtraction on your Maryland taxes. So can your family and your friends. Anyone that gives a gift to anyone in a Maryland ABLE account, if they live in Maryland, you can use that contribution as an income subtraction, which is a really nice incentive to save, right? It also is an easy enrollment process. Lots of times people with disabilities have to fill out these really lengthy applications and you send them off and then you have to wait months, years. I'm thinking of Social Security and specifically to hear whether you've been accepted. With an ABLE account, you can set that account up in about 15 or 20 minutes online. And once it's established, you can manage the account completely online so you have easy access to your funds. All right, let's go ahead and take a look at the next slide as we look at who is able to open an ABLE account. What is the eligibility requirement? So our regulations for ABLE are actually housed within the Internal Revenue Code, Section 529A. Some of you might be familiar with with college savings accounts. That's Section 529 or 529 accounts in the IRS code. And we are sisters, if you will. They're 529, we're 529A. So that is where our regulations are held. And that's where you would be able to know exactly what all of our guidelines, if you were ever suffering insomnia and wanted to read the IRS code, that's where it would be found. And what it says for eligibility is 2 things. The person had to have the onset of their disability before their 26th birthday. And the second is that they have to have a disability that meets the Social Security Administration's definition of a disability. So if you're ever wondering what those would be, Social Security Administration has what they call the Blue Book, and it lists, the thousands of different types of disabilities that qualify, but they are very wide, but they are usually things that are going to be present with a person throughout their life, and that they are going to have a disability that significantly impacts their ability to consistently work and live independently. All right. So examples could be someone who has Down syndrome. It could be someone with an intellectual disability, developmental disability, autism spectrum disorder, seizure disorder, neurological disorders. There's many. So just when you think about it, it's usually going to be something that's going to be present with that person throughout their lifetime. And the second is, I want you to just know about eligibility. By today's regulation says that it has to be by the 26th birthday. All right. And there has been legislation passed. It actually will take effect on January the 1st of 2026 that'll make people eligible for an ABLE account if they had their onset of their disability prior to their 46th birthday. So that's going to help out a lot of folks with later onset, folks that may have had an automobile accident and have a traumatic brain injury, or a veteran that had their disability with a later onset. So that's coming January 1st. But for now, it's age 26. A lot of times when people are in the enrollment process, the way that they're going to know instantly if they're eligible is there's a question right up front that says, hey, are you currently receiving SSI or SSDI? If that's the case, you can go ahead and check whichever one is true for you or the person that you're helping to open the account. For those of you who may be helping to open an account for someone and you're saying, oh, well, the person I'm trying to open this account for currently isn't receiving SSI or SSDI. And that's not uncommon, especially when we look at families opening an ABLE account for someone under the age of 18, because they may have a qualifying disability, but if they were to apply for Social Security SSI benefits, they would likely be denied because they're going to count the whole family's income, and that often disqualifies them. So in that case, the person opening the account signs a self-certification, if you will, indicating that the person does have a qualifying disability that began before age 26. And then they can go to our website and download a form called the Disability Certification Form. You can just take that form to your physician, have that physician sign it, and check off that disability code, and you just want to maintain it with your records just in case you're ever asked to produce it. So again, you don't have to have this disability certification with you at the time of enrollment, but you want to have it in the future just in case you're ever asked to produce that. Okay, next slide, please. And we're going to take a look at who owns the ABLE account. All right. A person with a disability is always both the owner of the account and the beneficiary of the account. This is a little different than, say, maybe someone in the someone who may have a 529 college savings account. Usually it is a parent or a grandparent that owns the account, and the beneficiary is the person that they're saving for their college education. But with ABLE, they are always the owner and beneficiary. So here in Maryland, we have many folks who do manage their own ABLE account. They're able to do so. We also have a lot of folks that need help managing it. They can select someone to manage it on their behalf. Certainly, if we're talking about someone under the age of 18 who's a child, they're going to have to have someone serve in that capacity. And in the ABLE space, what we call that person is the authorized legal representative. So that's the ALR. That's usually a parent or a grandparent opening it on behalf of a minor. And after the minor turns 18, if they're able to manage the ABLE account, they can go ahead and do so. Many times we often find that lots of folks want to maintain that ALR on the account just because they need some assistance with the account management process. And they're certainly able to identify somebody to do that for them. Okay. Next slide, please. Let's just say you have a family member or someone that you're opening the account for who has a significant disability and they're not able to sign like a power of attorney or something like that, and give consent for you to manage the ABLE account. They can't just say, hey, I want my mom to manage the ABLE account. So in that case, if you have a person that's with that situation, please know that you still can help the person by opening an ABLE account on their behalf and managing it for them if you meet one of the following criteria. So Heidi, if you can advance to the next slide and we'll take a look at who would be able to manage that account if they were not able to do so themselves and couldn't provide consent. So first of all, they may have a power of attorney in place, or maybe they have someone has guardianship or conservatorship. It could be a spouse or a parent, a sibling, a grandparent, or someone serving as representative payee. So those are the folks in that order that could serve as someone managing that account on their behalf. Okay. And if you guys have any questions as I'm talking and you're saying, well, gosh, Kelly, that was clear as mud, go ahead and pop that question in the chat and we'll make sure that I review that. Okay, thank you. All right, so Heidi, let's advance to the next slide and we will take a look at, pardon me, contributions. So we'll go one more slide down. We're heading into that contribution section and we're going to talk about things we need to know when we're contributing money to the ABLE account. You know, here in Maryland, when you set up the account, it takes an initial contribution to get that account funded and up and running. And that amount is $25. That's not a fee. It's the amount of money that you choose to open your account with. It could be more, but it's a minimum of 25. After that, who's ever managing the account can decide when they want to make additional contributions. Some people like to set up a monthly contribution. Some people just like to log in every couple weeks or months and they make a contribution of whatever amount. It's totally up to the person managing the account as long as it's a minimum contribution of $5. The big number I want you to keep in mind is what we call the standard annual contribution limit. And this is something that ABLE programs nationwide have to follow this. The IRS says, hey guys, you can contribute up to $19,000 a year into an ABLE account. And every January 1 of the next year, that starts all over again. So 19,000 for this year, 19,000 for next year, the following year. That account, your ABLE account, can continue to grow its balance over year after year, but the amount you can contribute is limited to $19,000 a year. So you want to keep that in mind, especially if you're a family member who's joining us today and is thinking of using the ABLE account as an estate planning tool to be able to leave an estate or large amounts of money to your child with a disability, because most of the time our estates exceed 19,000. So this is where we would see a need for multiple planning tools, such as a special needs trust. And special needs trust and ABLE accounts are collaborative tools. We oftentimes see families eventually winding up with both because of different reasons. But here, I just want you to keep in mind that there is that $19,000 contribution limit. This amount does change from time to time. As a matter of fact, it's gone up the last 3 years in a row. It's tied to the federal gift tax exclusion that says, hey, you're allowed to give somebody a gift in this amount of money without paying taxes, right? So if that should change next year, if the IRS changes that and increases it to 20 or whatever they're going to do, Maryland ABLE standard annual contribution limit will arise with that as well. We also have an exception to the rule. If a person is working and has an ABLE account and they're not already contributing to a retirement account, or say their employer is not contributing to a retirement account on their behalf, they're actually eligible to be able to make additional contributions to their ABLE account up to $15,060. All right. So Heidi, if you could pop over real quick to the next slide and we'll take and I won't go too far into the weeds on this, but certainly anyone that's on the call who is working or someone that you're supporting who is working, please know that they may be eligible for able to work contributions. So if they have a job and they're not contributing to a 401k or any other retirement and their employer's not, they can contribute that additional amount of money up to $15,060. So for example, if someone is earning $5,000 for a part-time job, they could contribute that extra 5,000 to their ABLE account. But let's just say go a couple years down the road, they're working full time and they got a raise. Maybe they're making $30,000 in income, right? So we would see that they would still be capped at that 15,660. Okay, that's how that works. So if people have questions, additional questions about able to work, we can talk about that a little bit more in a bit, or you can follow up with me after the presentation. So let's go backwards to that slide we were at before, so we can look at a couple of other things that we want to keep in mind regarding contributions to an ABLE account. Whoops, actually, can we go backwards, Heidi? Back one more, and we'll look at this $100,000 ABLE account balance. So I'm throwing out a ton of numbers here, but these are just some of the big ones I want you to keep in mind. And this is the amount of money in which you can have in your ABLE account before those SSI cash benefits may be suspended. Notice I said suspended. It's like having a pause button pushed on that Social Security cash benefit if you were to exceed the $100,000 ABLE account balance. This would not happen if someone was receiving SSDI, and sometimes we find folks who are receiving SSDI because they don't have an asset limit. But for SSI cash benefits, that amount is $2,000 outside of an ABLE account and $100,000 within an ABLE account. So let's just say year after year, they're maxing out their contributions, and eventually this ABLE account grows to $101,000, right? So what would happen is Social Security would push a pause button on those monthly cash benefits. However, Medicaid and all waivers remain in place. And at any time that you would spend money out of the ABLE account and the balance should fall below the $100,000 balance, Social Security can automatically reactivate those benefits because you were never disenrolled, which is the big difference between trying to save and invest outside of an ABLE account, where you would have the ability to have up to $2,000. But if you were to exceed that limit, you would lose your Medicaid immediately, and you would have about 6 to 9 months to spend that money down. If you didn't, eventually what would happen is you would become disenrolled from Social Security and have to reapply all over again. So just having had that experience with my daughter in applying for her benefits, it took 2 years to get her SSI benefits. So you can bet your buttons I'm not going to have her regular rep payee account ever exceed $2,000, because I don't want to have to deal with having to reapply all over again. All right. And also, let's just say someone is receiving SSDI and they don't even have that $2,000 asset limit. They could continue to, make the contributions at $19,000 a year until, it grows past 100,000. It can actually grow up to $500,000, and it wouldn't impact benefits. We could also continue to make you could continue to make contributions to the account until it reached a $500,000 mark. And I hope this is a problem that a lot of people will have. I don't have this problem right now, but I hope other people do, that you reach that $500,000 account balance and we're not able to take contributions until some of that money is spent down, and then you could continue to make contributions again. The balance can continue to grow past 500,000. We just couldn't accept contributions. And it's important to know that there's only one ABLE account per person, and only one person can serve as an ALR. All right, let's go ahead and advance to the next slide. We talked about able to work, so let's pop past that one. And we'll also talk about the ABLE Financial Planning Act that makes available to others the ability to roll over money from a 529 college savings plan. Let's just say you open an account for your son or daughter when they were born, and maybe we find out that, Perhaps college is not in their pathway and you've got this, money, $20,000 sitting in a 529 college savings plan. You can roll that money over into a Maryland Able account with no penalties or fees to do so. And now you've expanded what you can use that $20,000 for, right? Formerly, you could only use it for education, tuition, room and board, books, that kind of stuff. But now you can use it for anything that's going to support them in their health, independence, and quality of life. And then you think, well, gosh, what if I roll it over and then they do wind up going to college? That's not a problem either, because you can still use that money to in an ABLE account to pay for education, college, room and board tuition. Okay. It is subject to that $19,000 standard annual contribution. So if you have $20,000 in a 529 account, you could roll over 19,000 this year, less any contributions you've already made, and then roll over the rest of it next year. Okay. Next slide. I do just want to say one final thing about rollovers and able to work. Currently, the legislation that made it possible for us to have able to work contributions and rollovers to able is scheduled to sunset December 31st of 2025. So if you're someone that's considering rolling over money from a 529, you may want to go ahead and do that now. We do have the Enable Act that has been proposed and sponsored. We've got some great bipartisan support for the passage of this bill that would make it permanent to have able to work contributions, and also the rollovers from 529. But we also know that there's so much stuff going on all the time on our political landscape that sometimes even great bills don't get passed because things are really busy. So just in case you're thinking of doing that, you may want to think about it sooner than later, but things are looking good. Just so you know, we're getting some good support. Let's take a look at what happens when we have money in the ABLE account and what our choices are. I know this is going to be a lot of information in this section, but your takeaway from today should really just be that, hey, when I have an ABLE account, I've got options. I can either choose to save my money in the ABLE account, or I can choose to invest my money. So here in Maryland, we have the cash savings option, which is an FDIC insured interest bearing product. Okay. I think when my daughter got her last statement, I think she was receiving 4% interest, which is really pretty good, right? So that's one option that you have. And a lot of our account holders really like this because, they use their money throughout the year. They're thinking, well, I just want to keep it in the cash savings so I can get to the money quickly and use it for what I need. While others say, I really just want to use this account for long-term savings. So they choose one of the investment options. And we have 4. These are all managed. Their portfolio is managed by Vanguard, and they've been created for Maryland Able. We have a fixed income one, which is 100% in bonds. So it's much more secure than having anything in the stock market. So that's one option if you wanted to do an investment. We also have the conservative option, which is just 20% invested in stocks and 80% in bonds. Again, pretty stable. A moderate is a 50-50 split between stocks and bonds. And the aggressive option is 84% in the stock market and 16% in bonds. So this is for someone who's really planning on just leaving that money in there long term, and they're willing to ride the ups and downs, the rise and fall of the stock market. The good news is, guys, you don't have to worry about this right now and get all tied up on this. Just know that you can choose one of these options, or you could choose all 5. There's no pressure, and you can change your investment strategies up to twice a calendar year with no fees or penalties. So every time you make a contribution, you get to select where you want that to go. Maybe if you open the ABLE account, you put the $25 initial deposit in the cash option, but maybe your family member has a special occasion coming up or a birthday or holidays, and they get, a couple of $100 for something. You may say, well, I'm going to put half of it in cash and I'm going to put the other half in an investment option. And it's totally up to you. And that's the good thing about the flexibility of picking where you want your investments to go. All right, next slide, please. All right, you can go ahead and skip past that one. And we'll talk about account fees. There is a fee to have a Maryland Able account. This is called an account maintenance fee. And people often want to know, why do we have a fee? Well, this is a really good question because this is a tax advantage savings account intended just for a person with a disability. Many ABLE programs are administered under their state treasurer's office or under another maybe disability agency, like maybe a DD council or something like that. So these are all government agencies. They're government. It's not a bank. So the state treasurer's office is not going to act as the transactionary banker on this account. We have to partner with several financial institutions. We have the Bank of New York Mellon, who holds in trust the $118 million in assets. We have Vestwell, which is our financial tech company that runs the back end banking through that account portal on the website, making those contributions, taking withdrawals, paying the vendors, things like that. They have a customer support team Monday through Friday, 9 a.m. to 8 p.m. They run the website. And then we partner with TrueLink, which is another financial institution that offers the prepaid card. So that's where we see the need for these organizations to charge this fee to keep these accounts up and running. The only additional fee that you may have, in addition to the account maintenance fee, may be an asset-based fee if you decide to choose one of the investment options. There could be an asset-based fee, which is pretty industry standard for financial investments. And also if you choose to have the prepaid card, and we'll talk about that in just a minute. But anyway, accounts maintenance is assessed quarterly at $8.75, but it's also prorated. So if you opened your account yesterday, you're not going to pay $35 for this year because you didn't have the ABLE account January through mid-June. Right? If you have any questions about the fees, go ahead and put that in the box, and we'll go on to the next slide. Let's talk about who can contribute to the ABLE account. And the good news is anybody, absolutely anyone can contribute to the ABLE account. It could be a contribution from the account owner, him or herself, their family, friends, employers can make contributions, unemployment funds. If someone, is laid off for a period of time, if they're working seasonally, they can put unemployment funds in there. Benefits from back payments. My goodness. This has been a wonderful tool to handle those back payments. Sometimes people apply for SSI and it takes a year, 2 years, sometimes longer. And these back payments can be really large payments, which automatically they're over-resourced, right? You can't have more than 2,000. So they give you this large back payment of money, no fault of your own, you're already over-resourced and you're given an amount of time to spend it down. But with an ABLE account, you're not forced to do that spend down. You can put the money in the ABLE account and access it whenever you need it. All right, there's also those rollovers from 529 college savings plans, small inheritances, or small settlements, right? So this is, again, where we're seeing that need for multiple planning tools like a special needs trust for larger inheritances. Anything over that $19,000 a year, you may want to investigate how a special needs trust may be beneficial to you for your estate planning if you're leaving money to a child or someone with a disability. Okay, next slide, please. Let's talk about how we access money in the ABLE account. So with ABLE, this is an online account management system. We're not going to go down the road and see the Bank of ABLE. There is no brick and mortar building. You're not even going to go to your own bank, your PNC or Bank of America, M&T, and open an ABLE account because they're not going to know what you're talking about. These accounts are opened online through the website. Our website is marylandable.org, and you can open your account there. And in that enrollment process, it will ask you to link your ABLE account with an existing bank account of your choice. So it could be your checking account, your savings account. It's with any bank, federal, national, regional bank, savings and loan. It doesn't matter. You can use whatever bank you want. And you link the money. You link your checking or savings account to the ABLE account. And that's how you put money into the ABLE account and how you can take withdrawals out and be able to spend it from your regular checking or savings. As an example, when my daughter opened her account, she was 14 years old. She did not have a job. She didn't have a checking account. I decided that what made most sense was for mom and dad to link their regular checking account with the ABLE account, because after all, we were the only ones that were really putting money into her ABLE account, and we were the ones taking it out to pay for her braces and summer camp and stuff like that. So that's what we did. Fast forward years later, when she was finally approved for SSI, she had her rep payee SSI account. I went ahead and added that as a linked bank account. So that way it makes it convenient for me to be able to transfer excess money at the end of the month from her SSI benefits, and I move it over to ABLE electronically where it sits and is no longer a protected asset. And if she ever needs it for something, she has money that's being saved there. If she wants to access that for larger expenses, we can go ahead and transfer it back to the linked bank account. So that's how you get money in and out of ABLE. Also, we have a couple of other ways. If someone that is not a person that has a computer, or they don't do online banking, you still can do paper enrollment and request checks via paper withdrawal requests. There's a form to request contributions be made. This does take a lot longer because it's going through snail mail, okay, but it is possible. And also we have the prepaid card, which is another option. And we're going to talk about that in just another second, because that makes it real convenient to get to that money in the ABLE account. So we'll move on to the next slide. And we'll look at how the money can be used. And I love talking about this because, yes, ABLE accounts are intended to be able to save and invest money for the future, but they're also really intended to be accessed whenever the person with the disability needs something. They can use those funds for anything that's going to support them in health, independence, or quality of life. And that's exactly what the regulations say. So for some people, that definition is so broad, they're like, well, can you give me some ideas? Because I'm not really sure what that means. So what the IRS did is they made up a list of categories. These are not intended to be all inclusive, but rather to kind of get you thinking what a QDE would be. Let's take a look at some of them. With health prevention and wellness, you're probably thinking, well, that makes sense. That's my prescriptions, maybe doctor co-pays, hospitalization, whatever. But wellness, what about wellness? Things such as yoga, a gym membership, therapeutic horseback riding, they all promote wellness. So all those things would fall under that. Housing, you can use rent. You can use the ABLE account to pay rent or mortgage. This is something that's different from a special needs trust. Some trusts can't do that. They can buy a house in the name of the trust, but they're not necessarily allowed to pay rent. Okay, so that's another reason that people wind up with both the special needs trust and an ABLE account. They fund their ABLE account every year with a contribution from their special needs trust so that they can pay those rent or mortgage payments. Education. So education can be college, room and board and tuition, but it can also be tutoring when you're in school. It could also be any kind of education, sewing classes. I've heard a lot of folks going back to old school skills there and getting those sewing classes at Joann Fabric. Of course, I heard Joann Fabric's going out of business, so I don't know where they're going to get this done now, but that was a thing for a while. We're looking at transportation. This could be taxis, Ubers, Lyfts. It could be airfare, train fare. Okay. Basic living expenses would be things like utilities and clothing and food. Assistive technology could be braille readers, screen readers. It could be computers, but it can also be the monthly cell phone fee and the cell phone itself. Okay. So on and so forth, all the way down to funeral and burial expenses. So I'm going to pick on Heidi for a minute because I want us all to know that when you're managing an ABLE account, you're the one that's making the decision when you take that withdrawal to make sure that it is a qualified disability expense. You kind of want to use this little litmus test. I'm about to take X amount of money out of the ABLE account for fill in the blank. Does it support the account owner in his or her health, independence, or quality of life. So based on that, Heidi, if my daughter Lily wanted to go on vacation and she wanted to use funds from her ABLE account, could she pay for her vacation from her ABLE account? What do you think?
I feel like it's a trick question. Um,
Does it
I
support her health, independence, or quality of life?
I feel like it supports our quality of life.
Absolutely. It does. It supports her quality of life. It also supports her health because everyone benefits from a vacation physically, mentally, emotionally. So the answer is yes. Now the difference is, could Lily use her ABLE account to pay for take her whole family to Disney? No, because it's only intended to be used on her. So that's kind of how you want to think about things as you're using your ABLE account. As long as you're able to justify that it supports in one of those areas, it's a qualified disability expense. We do recommend best practice is to keep documentation of your expenditures. And this looks different for different folks. Some folks are young and tech savvy, and oh boy, they take a receipt, they scan their receipts, and they got this whole little file folder with all the stuff in there. Some people use the prepaid card because it tracks the merchant and the amount. That's cool too. And then you've got, I wouldn't say old people, but senior seasoned people like me who are very paper oriented. I just take a file folder and I label it ABLE account 2025. And every time my daughter brings home a receipt for something, I chuck it in that folder. And in the event of ever having to prove how I spent the money, I would just turn that over, a folder for every year. So it really just looks different for each person. You are not going to have to submit your documentation to Maryland ABLE or any ABLE program, to tell you the truth. The only person that may ask to see it would be who? IRS, right? Because this is where our regulations are housed. And they would want to look at that and they'd want to determine, number one, if your family member was audited, they'd say, okay, Lily Nelson got so lucky. She got pulled for this random audit. Let's see. She's got an ABLE account. Does she qualify for it? Oh, I can see she's getting SSI. Check. She qualifies. Number two, how's this money being spent? Well, I could produce receipts for how the money was being spent. Okay. So that's how that looks. All righty. So let's go ahead. And if there's any questions about QDEs, go ahead and put them in the box and we'll go ahead and advance so we can have time for questions. One of my favorite parts of the presentation is sharing with you the Maryland ABLE account features, because I think we've got some great ones. The first one is our online gifting page that comes with every ABLE account. It's so easy to use. So somebody can send a link to their gifting page via text, email, or messenger. All right. So, Lily just completed her Future Links program and she's had a little graduation party on Saturday. So when she invited her friends and family, she said that she's actually saving for a special trip right now. So she sent a text link to her gift page. And people get that by text. They can click on it, put on how much money they wanted to give her for her graduation present, where they're sending it from. They hit send, it goes directly into Lily's ABLE account. The person receiving the link doesn't have access to her ABLE account. It's just a link to make a contribution. And the best part is everyone that gave her a gift is able to use that gift as an income subtraction on their Maryland state taxes. So it's pretty cool stuff. I will share with you, out of our, again, over 7,557 account holders, 766 of them have been actively using their gifting page. And over the last 7 years, a little over 7 years, they have received $7.2 million in gifts. Not too shabby, right? People are very supportive when it comes to saving for big items, or if there's a medical need or some hardship experience that people are going through. Those gifting pages really come in handy. The prepaid card option, I love this because it's an easy access to your ABLE funds. Okay, so this is something that comes as a feature, as an additional option. So it has a cost of $1.25 a month. If you add it up over the year, it's $15. To me, this is just my personal opinion, it was a great fit for me because I'm trying to simplify my life. I want to just get this prepaid card, load funds from the Able account onto the prepaid card, and then I use it and my daughter uses it to pay for things online and in the community. I don't have to worry about electronically transferring money each and every time I make a purchase. I just load money every quarter onto the prepaid card. It was also a really great way to teach our daughter financial literacy skills. No one is emerged from their birth knowing how to budget and save, but putting money on her Able prepaid card is a specific amount of money that she gets each month, and it helps her to understand how much money she has available to her. She doesn't have access to all the Able funds, just what is loaded on her card. And it's taught her to make some choices and decisions so that she has enough money throughout the month to do the things that she needs. It's also used for easy record keeping. All of your transactions are recorded there. You can run a little report to show how much money you've spent on food or restaurants or entertainment or medical. It's kind of cool. So something to think about if you're interested is that prepaid card. The direct deposit features that we have options for is direct deposit from Social Security into Able accounts. Some people like that and want to just do that right up front. Other people are like, no, I'm just going to keep that in my Rep Payee account and then I'll move money over when I'm ready. So either one, it's fine. It's up to you. The other is the payroll contributions, direct deposit of your contributions from your paycheck. And this right now is only available for either the account owner or the ALR. We've also launched a mobile app, which is really exciting. So you can manage your Able account from your mobile device. It's for iOS or Android. So that's really a cool feature. And also, we have started something a couple of months ago called the automatic savings option. Ours is called Weather Booster, and it's kind of fun because it's every time there's a 50% or more chance of precipitation in your zip code, it automatically pulls the amount of money that you designated. If you sign up for this option, I started with just $1 because my point was I wanted to teach my daughter at the end of the year, even a little bit of savings at a time really adds up. So every time there's rain or snow or whatever, and believe me, we've had a lot of rain in the spring. She's very excited because she knows she's getting $1 every time it rains. It's going to be fun to be able to look at the end of the year and go, look, wow, with just $1, look how much was saved. And people can put more than that, certainly, but I'm trying to use it as a financial literacy tool. So some great options and features here. Let's go ahead and take a look at the last slide that we have here, or we can skip past the mobile app thing. Just reminding everyone, Maryland does offer a tax incentive for contributions to an Able account up to $2,500 per person. So if mom and dad are married and filing joint, they can actually claim a $5,000 income subtraction for contributions made to an Able account. Every little bit helps. All right, next slide. And I think we're wrapping up here. These are just some summary of the numbers that we talked about. This might be a good one to kind of noodle over for a minute while we take a look at that question, the chat box. How's that sound?
Great. So there's a couple questions. If a person only had enough assets to use one plan, Able account or special needs trust, what are the pros and cons of each, and which might be better option for a person in that position?
Oh, that's an excellent question. And Heidi, I can also send you a comparison chart between special needs trusts and
Perfect.
Able accounts that might help this person more to make a better decision. But basically, there's a couple factors. Certainly the cost. When you have when you sit down to prepare a special needs trust with an attorney, it will be an investment of both your time and your money. It's going to take a couple of months to really create this finely nuanced product with the attorney. And it's going to run you anywhere between $1,500 and $14,000. This is just what I'm hearing from feedback from families across the state. With an Able account, your time invested in the setup is about 15 to 20 minutes, and your investment in fees is that $35 a year annual maintenance fees. Okay, so that's one thing. The next thing that's different is the ability to how much you can contribute, right? So with a special needs trust, there's no limit. You could put $1 or $10 billion in a special needs trust. With Able, you can only contribute 19. So if you're looking to leave your assets from your estate, you need a special needs trust to do that. The other option is not option, but the other difference is the person with the disability's ability to access their own money. With a special needs trust, you always have to have a trustee appointed. So they have no direct access to their funds. With an ABLE account, they are able to access their funds through their prepaid card, which I think really promotes self-confidence and independence in a manner, they're learning about that budgeting and savings through that prepaid card and different things like that. I know that my daughter takes a lot of pride, and she's built a lot of self-esteem being able to make her own purchases and learning about saving and spending money. So those are just some of them, but I'm happy to make that available. I'm going to send that to Heidi after the presentation and she can reach out to you. Any other questions?
Also, if a person started working and were slated to lose their Medicaid due to their income, am I understanding right that they could potentially open an ABLE account and divert some of their work income to an ABLE account and potentially still qualify for Medicaid in that way?
That is an excellent question. Thank you for whoever shared that. So this is the situation. ABLE accounts are asset protection account. They don't get past that income situation. So there's two ways a person can lose or lower their benefits. Number one is assets. You can't have more than $2,000. This is where ABLE is an answer to that problem. Yes, in an ABLE account, you can have up to 100,000, right? Or more if you're receiving SSDI. With earnings, that's a job, which how much money you're earning, there is an earnings threshold that Social Security sets or Medicaid sets or whoever sets that says this is how much money you can earn or make. That even if you put that money into an ABLE account, it's still counted as earnings by Social Security. So if they say you're maxed out at making $2,000 a month, and I really don't know what the earnings threshold is right now, but if you were to make $3,000 a month, they'd say, well, we're lowering your SSI payment, or now you're making so much money, haha, that we're taking it away altogether. So ABLE is the solution for being able to have the money from your earnings, but not exceed threshold limits.
Is there a minimum age for a disabled person for that the account is for?
No, a person with a disability that's born with a disability, parents maybe have a child that's born with Down syndrome. They know that they have Down syndrome and it is going to be present with them throughout their life. They can open an ABLE account for a 3-day-old infant, right? So sometimes we see account holders that are infants, and sometimes we see account holders that are just getting their account started in their 60s and 70s because ABLE accounts didn't exist a long time ago and they're just finding out about them. That number, age 26, that only applies to the onset of their disability. So you can open it at any time.
And can a recipient's SSDI be deposited into ABLE accounts? There's lots of good questions.
Yeah, that's great. So yes, both SSI and SSDI can be set up as an automatic contribution to the ABLE account. So you would just want to contact customer support once you get the ABLE account established, and they have a process that Social Security will have you go through to direct those monies into ABLE.
And then this goes back to what you're just talking about. For DDA and the state of Maryland, they're not able to question the ABLE account expenditures, correct?
So they're not going to have access to your expenditures because you're managing your own ABLE account. Now, I think that what some people mean by that is, let's just say you're getting certain types of waivers for certain support services. This is where I've heard people, they have to be careful because if you're using your ABLE funds to pay for some of these things that your waiver is paying for, and they were to learn of that, they may say, well, why then am I giving you the money for the waiver to do this? That's what I think families are talking about. But no, they're not able to access your account to see what those expenditures are.
And can an individual have both an ABLE account and special needs trust?
Absolutely.
Okay.
We find that most of the time Eventually they wind up with both. That's what I did. I started with able. As a parent that's got 3 kids working full time, one with special needs, I did not initially have the money or the time to sit down to do the special needs trust. So I went with that low lying fruit. I picked that low lying fruit because I got on the ABLE website and I opened the account in 15 minutes and that was done. And then I could just begin that saving process and have that all set up, especially way before my daughter transitioned out of school and into, adult services where she's applying for SSI. I did not want to wait to the last minute. I wanted that ready to go. But eventually, when I looked at being able to leave some of our estate to our daughter, as well as our 2 sons who don't have a disability, that's when I went with this special needs trust so that she could have that part of our estate and our life insurance money and stuff like that, which is going to exceed 19,000.
And then I know we'll squeeze in 1 or 2 more. According to the website, why does money in the ABLE account go back to the state upon the death of a beneficiary?
So here in Maryland, this is different from some other states. I think there's maybe 4 or 5 states that have what we call a Medicaid clawback provision, which says that money within an ABLE account upon the passing of the person with the disability is not subject to Medicaid clawback in Maryland. Maryland will not seek recapture of those funds. But what it does say is that the federal government reserves the right to recapture their portion of funds. So when people receive Medicaid waivers, they're getting those services paid for from a combination of state funds and federal funds. So the federal government says that they still have the option to do so. Okay. So we look at a situation like there was this woman has recently passed, but she was on waiver services for probably 40 years. She had a lot of medical things going on as well as her intellectual disability. She was having her kidney dialysis paid for 3 times a week, transportation to get her there. The amount of money that went into those Medicaid services were in the millions of dollars. When she passed away, she had about $12,000. There's no way that her family could have paid for all of those things with the resources that they had. So if the federal government does come back and try to recapture that money, they would say, look, this is how much money we put out to pay for that money on that side. So that is still an option, but Maryland Medicaid does not. I hope that helps. It's a long discussion. It's a complicated answer, but I wanted you to have both sides.
There's a couple more questions.
Yeah.
I know we're over time. Do you want to answer them, or
Oh, that's fine with me. And if anybody is limited on their time, please feel free to drop, but I'm here to hang in.
Okay. Can SSI payments be made to the ABLE account? Oh, we already went over that.
Yes, through the direct deposit. Yep.
Are gifts contributed, gifts and contributions taxed?
The gifts and contributions are not taxed. Anything that's in the ABLE account is not taxed. So like, in other words, does the person mean like,
I think if I'm receiving a gift from someone into my ABLE account, is it
right,
then
it is not
taxed?
taxed. Nope, it's tax-free. Mm-hmm.
There is a maximum account contribution. Are there maximum account of expenditures from the ABLE account every year?
No, the only thing that limits your withdrawals is the amount of money you have in there. So if you only have $100 left in your ABLE account, you're limited to withdrawing $100.
Okay, I think we got them all. Kelly, thank you so
Oh,
much. You
great
were
job, Heidi.
a
Good
rock
job
star.
facilitating. Thank you, guys. Actually, if you wouldn't mind popping to the last slide so people have contact information. If you guys have any additional questions, I'd love for you to reach out to our website. We have a great FAQ section, frequently asked questions, which is super helpful. That number there is our customer support. They are available Monday through Friday at that number. So it's also in the chat. Okay. So reach out to them with any questions. Also, follow us on our social media pages. We try to keep keep our page very active of where we're going to be in the community, different information we're hearing from Medicaid or DDA or Social Security, financial literacy tools. We try to stay really active. And if nothing else, sign up for our quarterly newsletter. That's right, 4 times a year, and that's it, 4 times a year. You will get updated information about ABLE accounts. And thank you guys again so very much. My information was in my contact information was in the chat. You can also reach out to Heidi, and she's going to send you my slides. So thank you all so much for
Yes.
joining us today.
And I added a link to our next webinars coming up. So we'd love to see you again. Feel free to reach out. And thank you again, Kelly. And everyone have a great afternoon.
Thanks. You as well. Bye-bye. So we got to do all of our questions. That's awesome.